Bitcoin is exploding. Experts predict huge gains, but is it a bubble about to burst? From $475,000 Bitcoin to the next altcoin season, we cover it all. Find out what's really happening in crypto and why you need to know. In the latest video from Altcoin Daily, Bitcoin's price surge is discussed, hitting a near all-time high of $109,800. The host predicts Bitcoin could reach $475,000 by Q4 2025 due to increasing nation-state and sovereign wealth fund involvement. Several factors contribute to this surge, including decreased Bitcoin exchange inflow, down 82% since November, a booming crypto market with stablecoin reserves at $46.9 billion. The anticipated passing of the stablecoin bill is highlighted, with expectations of it boosting liquidity and setting a clear regulatory framework. Corporate interest in Bitcoin is also mentioned, with some aiming to hold up to 5% of the total supply. Institutional and sovereign wealth fund involvement is emphasized, with these entities buying Bitcoin directly and through ETFs. Based on recent news, the increasing institutional interest in Bitcoin seems real. Articles in various financial publications confirm sovereign wealth funds are exploring digital assets. However, the price prediction of $475,000 by 2025 feels very optimistic considering the inherent volatility of the crypto market. While the regulatory landscape is evolving, with bills like the stablecoin bill potentially providing more clarity, substantial price increases depend on various factors including wider adoption and overall market sentiment, which can change rapidly. It's interesting to see traditional financial players entering the crypto space. In the latest video from CryptoRover, Bitcoin's recent surge is discussed, with the channel host predicting a continued rally. The host points out negative funding rates, suggesting the market isn't overheated yet. He believes Bitcoin could hit $130,000. He also discusses an Ethereum trade he opened, targeting $4,000, and mentions BlackRock's push for an Ethereum staking ETF, linking this to Ethereum's current gains. He advises viewers to utilize grid trading bots for lower risk and better performance, much like his own trading style. The host concludes by referencing previous market cycles where altcoins performed best in the final months and reiterates his $130,000 to $140,000 Bitcoin price target. He sold Bitcoin previous year for $57,000 per coin. Now, he bought ETH for $1,400, aiming for it to reach $4,000, and overall expects the bull market to last for another 3 to 4 months. Based on recent news, Bitcoin's price is indeed surging, though reaching $130,000 might be ambitious. Ethereum's potential rise to $4,000 seems more attainable considering the growing institutional interest and BlackRock's involvement. The overall crypto market sentiment appears positive, but it's essential to remember that market predictions can be volatile and things can change swiftly. It's intriguing how the host contrasts his previous Bitcoin sale with his current Ethereum investment, revealing his evolving market perspective. It makes me consider if he's really making these predictions himself or just following major market trends. In the latest video from Lark Davis, he discusses the massive financial reset happening now, worsened by rising government debt, failing currencies, and AI taking over jobs. He points out Moody's downgrading the U.S. credit rating, highlighting the country's shaky financial standing and the potential decline of the dollar. Lark argues this collapse offers a unique chance to rebuild with crypto and blockchain, urging viewers to invest in AI, robotics, and energy alongside crypto like Bitcoin. He predicts a significant wealth transfer and emphasizes the need to adapt and build in this new era, recommending community building, using AI as a tool, and focusing on personal growth. Lark's take on the financial system's instability aligns with recent news about rising inflation and concerns over the U.S. debt ceiling. The International Monetary Fund, for instance, has also warned about growing global debt and its potential consequences. While his enthusiasm for crypto is understandable given its decentralized nature, it's important to remember that crypto markets are highly volatile and not a guaranteed solution to financial woes. The integration of AI into the workforce is definitely a hot topic, and it will be interesting to see how this impacts different sectors in the coming years, though complete job displacement might be an exaggeration for now. In the latest video from Ben Cowen, Bitcoin's new all-time high of nearly $110,000 is celebrated. He discusses the recurring pattern of Bitcoin rallying after death crosses and the potential for a 10 to 15% drop following the upcoming Golden Cross around May 23rd based on historical trends. Cowen acknowledges his incorrect 2023 prediction and emphasizes the importance of not being overly deterministic. He speculates about potential Q3 market weakness due to the rising 10-year yield, currently at 4.6%, and the S&P 500's performance. He reaffirms his belief in Bitcoin's dominance, especially during market consolidation. He suggests if Bitcoin can break above $110,000, dominance will likely continue to rise. Even if a Q3 downturn occurs, Cowen believes Bitcoin dominance will still increase. Based on recent news, the Federal Reserve's interest rate decisions will heavily influence the 10-year yield, which Cowen points out as a critical factor. Current market analysis suggests the Fed may pause rate hikes soon, which could potentially put downward pressure on the yield, contrasting with Cowen's prediction. Additionally, several analysts are bullish on the S&P 500, forecasting further growth this year. This positive outlook for the stock market may indirectly support Bitcoin's price, potentially mitigating the predicted Q3 weakness. These are just observations based on current market sentiment and not financial advice. In the latest video from Coin Bureau, Nick discusses the declining Bitcoin supply on exchanges and OTC desks while demand from investors continues to grow. This situation mirrors the silver squeeze of the 1980s, where a limited supply caused a price surge. Large entities already hold a significant portion of Bitcoin's liquid supply, and with miners hodling, the available Bitcoin is shrinking. This reduced supply could lead to a price explosion, potentially reaching $200,000, but profit taking around $180,000 is also likely. Increased Bitcoin prices could fuel borrowing in DeFi, boosting altcoins. However, this situation isn't sustainable, and a market correction similar to silver's post-squeeze crash is possible, with potential long-term impacts. While the comparison to the silver squeeze of the 1980s offers a compelling narrative, it's essential to remember that Bitcoin operates in a vastly different technological and regulatory environment. Current news regarding increasing institutional adoption of Bitcoin could indeed contribute to scarcity, but predicting a $200,000 price point seems highly speculative given the inherent volatility of the crypto market. The interplay between regulatory developments, technological advancements like Taproot and Lightning Network, and macroeconomic factors will ultimately determine Bitcoin's future price trajectory. It's an exciting time for crypto, but caution and further